Good morning, everybody. Mike Vacchi, Princetontrader.com, here with your Monday morning pre-market webcast. Okay, we had a wild day on Friday. That was a fun day to trade. Wild day on Friday. We're in the September contract now. We traded as high as 24.43 in the morning. That new all-time high was rejected. There's no other word for it but rejected. Traded as low as 12.5, and we had a nice little short covering rally at the end of the day. So as we head into Monday, the key is going to be this 24.28 to 24.30 area, which encompasses the new weekly pivot at 28 up to 30, which is where the 9-day simple moving average comes in. So 28 to 30 is going to be the battleground if we get up there. You can see that 28 rejected last night, right around the time of early on Sunday night. We go down, we do 24 up to 28. We come down and we dip a little bit below 20, but still, it's a higher low versus 12.5. The number one thing that the Bears have got to do today, and if they can't do it today, they certainly have to do it tomorrow, is they have got to make a lower low. They have got to go down and take out 24.12.5, because if they can't, what you're going to see is the usual. And the usual is this. You make a low. You make a higher low. You play around at the weekly pivot for a couple of days. Then the bulls convert the weekly pivot and turn that into support, which is another successive higher low. And then it's off to the races. Then we go back and we revisit 24.43.5. We've seen it a million times, and we'll see it 1,000,001 times if the Bears can't do a lower low in the next couple of days and then hold it. They've got to start to convert areas that matter. The weekly pivot would be a nice start. Last week's low down at 24.12.5 being converted would be even better, and that would open the door. At that point it becomes a de facto test of the daily midband, which this morning sits right around 24.10. And the Bears would have to have some fuel left. They'd have to have something left down there to get through. So the Bears need to focus on not giving up the weekly pivot, trying to get through 24.10 to 24.12. And if they can accomplish that, then they can start to see a little bit more of a retracement. The whole world is waiting for it. And a lot of it's going to come down to the next couple of days and how it reacts to 24.28 to 24.30. It's going to be important. The big rejection off of a new all-time high, and it wasn't a new high by a tick. It was an area that they had. This chart here is a little deceptive because of the roll. Your all-time high was sitting at 24.37 yesterday on the September contract. So they took it out by a solid 7 handles. Then they gave it all back. At the point where 37 on Friday didn't go support, it really opened the door for an acceleration. And the Bears need to capitalize on that, and they've got a good chance to do that today. All right, everybody have a fantastic day. I'll be out with the midday. I'll also be out with the oil report. We're still long 45.60. We've taken more profits this morning. We took some profits for $1 there up at 46.60. We still have a runner on our trade, and then we're just going to kind of keep on letting that work against that 45.20 low. I think we are long a rally that's ultimately a sell in oil. So you can be long, but you got to be long taking profits with one eye on the exit door. You don't want to be early short, because then you are the squeeze. Don't be the squeeze. It's no different than ES. But that's an idea of what we're doing in oil. We'll get a video out on that today. Take care. See you for the midday. Follow us over on Twitter, Instagram, and Snapchat at Princeton Trader. Check us out on Facebook and join us for a free trial at www.princetontrader.com. Trade 'em well.